How's it going, everybody? It's Stas here. So the stock market didn't have the best day today. The S&P and the Nasdaq went down 0.6%. The Dow went down about 0.5% as the Russell went down over 1%. So today we're going to break down some stocks, some charts, my thoughts on the markets, and overall what has been rattling the market as of late. So sit back, relax, smash that like button, go down below, get your $50 from M1 Finance, check out my Patreon as well if you guys want all my real-time buys, sells, call-outs, a morning update video, plus much more. All of that's on Patreon, link down below. And with that being said, let's get right into the video. So like I said, today was not the best day in the stock market. You know, we saw a pretty decent drop this morning, followed by, honestly, a lot of choppiness throughout the day. You can see it here. We opened up at about 448, dropped to 446, ran back up to about 448, and then we were choppy all the way down from about noon here on the East Coast throughout the rest of the day, closing in the low 446s. And at this point in time on the 20-day 1-hour chart, we're just simply pulling back towards the main moving average. In this case, the main moving average being the 180 simple moving average, this gold line that you guys are seeing right here. That is simply what we're doing at this point, right? And we're not quite there yet. I mean, the gold line on the hourly chart is at about 444, so we could drop another buck, $2 to test that point, and I want to see what we end up doing there. Do bulls step in? Does volume kick up? Do we see buyers coming in to push this thing maybe back over 447, 448, maybe to all-time highs again? Or do we collapse under 444 and then we pull back on the 4-hour chart here? If we fell under 444, maybe we start moving down to 440. 440 is also a big level of support, as you guys can see on this 4-hour chart, on the 180 SMA on the 4-hour chart, the gold line, right? Remember, the gold line's the 180 SMA, green line is the 50 SMA, and this light blue line is the EMA, which I don't really use unless I'm looking at shorter time frames, like the intraday chart, 5-day, maybe sometimes the 10-day chart. I look at the EMA, but for the longer time frames, I'm mostly looking at the 180 SMA and the 50 SMA. So yeah, I mean, look at the 20-day chart for that 444 level on SPY and the 180-day chart for the $440 level. So we got some bad news today, guys. I'm not going to lie. You know, we got some very, very bad news, and this is kind of what caused the stock market to fall, at least initially. We got reports of U.S. and civilian casualties from blasts outside the Kabul airport, unfortunately, right? The whole Afghanistan situation, which we're not going to get into in depth in this video. I don't really want to talk about that here, but there's a lot of tensions right now, escalating tensions as the U.S. is trying to evacuate the area. And we had a news conference at the Pentagon on Thursday. General Kenneth McKenzie, and Thursday being today, General Kenneth McKenzie said, unfortunately, I mean, this is terrible stuff here, guys. He's the head of Central Command. He said that 12 U.S. service members were killed and 15 were injured in today's attack at the airport, which is just, man, that's just so tragic. I can't even talk about, I mean, I can't even put it into words how horrible that is. And at least 60 were wounded in total at the airport. So I'm assuming, obviously, people from Afghanistan were hurt as well in this, I believe it was a bombing attack or something like that. Again, I'm not looking to go too deep into this in this video, but it's just horrible what's going on over there. And at this point, it's creating a lot of uncertainty. And with a lot of uncertainty around the U.S., Afghanistan, tensions, all that stuff, The stock market, guess what? It doesn't like uncertainty. That is one thing that's certain, is that the stock market doesn't like uncertainty, right? So we saw that initial drop. We also have the Fed, everything going on with the Fed right now, tapering, this, that, the third. I really don't think they're going to make any remarks on tapering. That might be pushed on to later this year, maybe early 2022 or something like that. That's what I've been reading. So I don't think that's really affecting the markets. Maybe it is a little bit. I would say it's more and more has to do with the uncertainty, the casualties and so forth, which again, I mean, it's just horrible what's going on right now. So what do you guys think? Shoot me a comment down below. I'd love to know your thoughts, your input on everything as always. And when it comes to QQQ, which tracks the Nasdaq 100, we're simply seeing a pullback as well. It's literally the same as SPY. On this 4-hour chart, you notice how we're still above 370, which is good, but we're approaching 370 to test it as support. That's actually right where the moving averages are as well. So don't be surprised if QQQ falls a little bit more, maybe down to 368, maybe 366 at the lowest, maybe even 370. So I'm going to put it in a ballpark range where I believe buyers could step in here. I'm going to put that range between 366 and 370. And for tomorrow and for, of course, next week, these are the points that I'm going to be watching. So what do you guys think? Drop me a comment down below. And again, if you all are enjoying this video, I would really appreciate it if you hit that like button, and feel free to also subscribe if you want to catch all the content that I'm putting up here on YouTube. So now that we got that out of the way, the market update, what the heck's going on, let's talk about some stocks. A lot of these stocks are doing well, but one in particular, which we're going to bang out here in the beginning, is not. Peloton, PTON. They reported earnings today, and they reported guidance, which was just not good at all. EPS on Peloton came in at $1.05 in the red, so they lost $1.05 per share. Revenue came in at $937 million versus $921.66 million estimated for the quarter. So they did well when it comes to this quarter's revenue. Like I said, they beat revenue. But when you pull up the guidance, and let me show you all here on the live news tab, the guidance was just horrible. I mean, just horrible. And I might be missing something, but, it says it here. The proof is in the pudding. Let me pull it up, guys. Where is it? Okay, the full year 22 guidance is not that bad, but the next quarter guidance was not good. That is where it was horrible. So full year 2022 sales, they're looking at about $5.4 billion versus $5.3 billion estimated, so not too bad for full year 22. But for the next quarter, they're looking at sales of about $800 million versus $1.06 billion estimated. So that's way under the estimate there for sales. And I'm assuming that is why, we're seeing this drop, or at least it's contributing to the reason why we're seeing a drop. I guess you can say a good sign or a good piece of information here is Q4 ending digital subscriptions grew 176% to over 874,000. So you guys have to realize Peloton, not only do they sell the physical bike, the treadmill, which in my opinion, great devices, but they're just way overpriced. I mean, I'd rather buy something for much cheaper, or just go to LA Fitness or whatever gym you guys have around you for a lot less of a price. But that's just me. That's just me. But their demographic is obviously middle upper class. I mean, there's no one that is poor or doesn't have much money that can afford this stuff. And they sell not only the treadmills, but the bikes, but it's also these subscriptions. And that's good for them. I mean, if they didn't have a subscription model, if this was only a bike, I don't even know if they have a bike. I'm sure. No, they have a bike. What am I saying? If this was only a bike and a treadmill company with no subscription, it would pretty much be useless. But the fact that there is a subscription model here. That is solid for them. And I've never really taken the classes, but from what I'm hearing and from what I'm seeing, Peloton has a serious base of fans that love the program, that use it all the time. But for me, it's not enough to invest. I'm not the biggest fan of this. I don't think there's a huge moat around it. Maybe there is something I'm missing here, but I'm not the biggest fan of this as a longer-term play, and I've been open about that over the past couple of months. If you guys have been following me, probably even a year plus at this point, I've been saying that. But as a trade, it's not too bad. At this point in time, we are down about $7 per share after hours. We closed at 114. Now we're at 107. In fact, we got all the way down to under 100. That was pretty bad. We got to $97, meaning this thing got in a very quick bear market. Today, earlier in the day, we were at $120. After hours, we got to 97, and that is a drop of 20% in the same day. So Peloton got into a bear market, and now it snapped back about $10 in the after hours from 97 to 107, but it's still down $13 per share, or about 10% since this morning. So, Peloton is not doing well, the stock that is. And on the 4-hour chart, we're noticing is trading within this downwards channel, right? Lower highs, lower lows, all that good jazz there. That's been happening as of late. Now we're seeing a death cross, 50 SMA under the 180 SMA, and we just broke under both moving averages. So I don't know. At this point, I'd be looking for a trade, maybe if it got to the low hundreds again, high 90s, maybe for a move, for a swing back up to the 110s. But buying it here at 107 as it's in the middle of the downwards channel, that makes me a bit nervous, because the last thing I want to do is hop in at 107 and then this thing rides down to 95 again towards the bottom of the channel. Then all of a sudden, boom, I'm down $12 a share. That is not what I want to happen. So I'm going to give it some wiggle room here in the short term. And as always, I'd love to know your thoughts down below in the comments. And Etsy had one heck of a day today. Etsy broke out, up 5%, up over $10 a share. We're seeing a move above the moving averages. It's breaking above the wedge here on the 4-hour. And we're noticing a very, very small, but it's the beginning of the golden cross, 50 crossing above the 180 here. That's a good sign. So at this point, we are a bit overbought. I'm not going to lie to you guys. And we are trading at a 4-month high, which is awesome, especially for those of you out there that have been holding on and buying the Etsy dip over the past 4 months, which I personally have not been doing that. But if you have been, you're finally starting to get some gains now, which is awesome, and I'm happy for you guys out there. But it is a bit overbought, so I would personally wait for a pullback, maybe down to about 200, 205, test that top of the wedge as support, and then maybe we start ripping out from there. That is what I'm going to be looking for when it comes to Etsy. And eBay, ticker symbol EBAY, is also looking pretty bullish. eBay went up 2% today on the dot, up almost $1.50. And we're also, like Etsy, noticing a golden cross here. We're noticing it's trading above the moving averages. And with today's 2% move, we actually got above, which is great for the bulls here. We broke above this $74 level of resistance. That was a double top resistance back in July, towards the end of July. So the fact that we broke out of there, the ascending triangle also played out here. We squeezed above 74. This is a very good sign that we're forming a cup, maybe a cup and handle in the making here, and we might squeeze above 76.55, which is the all-time high here on eBay. So I like this pattern. I think it's breaking out. Definitely could be a buy the breakout opportunity. But as always, guys, I'm not telling you what to buy. I'm not a financial advisor. I can't tell you what to do. You must always do your own research, your own due diligence, as always, to be successful in the stock market. What's the point of just watching these videos, or any other YouTuber for that matter, and just blindly doing what they're doing? That's pretty stupid. Come on. You guys have to, and I know a lot of you do this, but for the minority out there that doesn't do this, you have to do your own research. Know what you're getting into. Understand the risks involved, because there's always risks involved, especially in the stock market and in anything pretty much anything in life has a risk involved. So if you get into stuff in the stock market blindly and then you get wiped out, to be honest, I don't want to sound like a a-hole or harsh, but I'm going to be honest with you guys. You have nobody to blame but yourself, right? That's just the truth. And we all lose money. We all get kicked in the face. It happens. We just have to learn from it and continue moving forward. The last thing I want to do is, you guys lose a bunch of money and then get discouraged and never get into the stock market again. That is the last thing I want to happen. But I also want to keep it real with you guys. So yeah, that's a little side tangent rant there. And the next stock I'm looking at is Zoom, which is in a pretty funky spot right now. Zoom went up 0.9% today, roughly, up about $3. And the past couple of days, we've been consolidating at 330, 340, and slowly moving up. And now we're right around that 50 SMA on this 4-hour chart. So by the looks of it, Zoom is holding the uptrend here. It has been ever since the beginning of May, so over 3 months at this point in time. So that's a good sign for the bulls. And the fact that we're slowly peaking above the 50 SMA is also a good sign. And there could be upside to about the high 300s from here, but peeling back the layers a bit and looking at the 3-year chart, actually the yearly chart will show it better. It makes me a little bit nervous, I'm not going to lie, because look, we're in a downwards channel over the past year. And the fact that we failed at 400 twice, we double topped at 400, and now we're back into the mid-low 300s. That is a sign that we double topped right at the top of the downwards channel, meaning we're still downtrending, and now we're trading under both moving averages on the yearly chart as well. So I'm not throwing Zoom right into the trash quite yet. I'm not flushing it down the toilet quite yet, but I'm telling you guys, if we don't break out back to this 4-hour chart, if we don't break out above 350 and start moving 400s again, and let's say we dump under 330, the opposite of us breaking out, obviously, that is going to be very detrimental for the stock, technically speaking, in the short term. And plus, they have earnings coming out in 4 days from now. So what day is that? Probably Monday or Tuesday, right around there. So if Zoom drops under 330, it takes the lows out here on the 4-hour. I'm telling you guys, back to that yearly chart, we could be filling the gap down. Now, whether, we go to 275, which is where we were, back in May, we go to 200, which would be the bottom of this channel, that'd be a huge drop from here. I don't know what's going to happen, whether we do that, this, that, the third, I don't know what's going to happen, but you got to be careful. So, Zoom, I'm watching it. I've been getting a lot of questions about it. There's my opinion. AMC's another one. AMC, baby. Let's go. What is this one at? AMC went down 8% today. Not the best day for the meme stocks. Well, actually, let me tell you something. GME did very well today. It was up to 215 earlier. And if you guys were in my Patreon, going to GME very quickly, we nailed this trade. I bought GME yesterday at $197 in the morning, and I told you guys, I wrote it to 227 and I didn't sell. That was a mistake on my part. That was a very real mistake on my part. And I was thinking about selling, I'm not going to lie, but I got a little bit too greedy. So I wrote it up to 227, didn't sell, wrote it back down, and it took some balls of steel to hold overnight. I'm not going to lie, but I did it. Wrote it up to 215 this morning. I didn't sell again. And I was like, I'm not letting this happen again. The third time it ran up to 215, you guessed it, I sold. So I made about 8% on my position overnight. And again, all you guys on Patreon know that we nailed that sell. Third time's the charm, right? Third time's the charm. And now we're right back to 205, down about $10 from where I sold. So I'm going to be looking at this one for potential re-entry. And going back to AMC, AMC went down 8% today, so not the best for this particular stock. But now that we're pulling back, we're actually still moving above the moving averages. We're just simply looking to test those moving averages after the massive run-up we saw, which is very normal. We see these healthy pullbacks all the time. And as long as we hold mid-30s, high 30s on AMC, I don't think the party's over. But the second we start pushing down low 30s, if we somehow take out the $30 level of support, it's going to be a bit rocky from there. But if we hold 37, 38, we could see mid 40s, maybe $50 again. Very, very possible. So I'm watching those stocks. DraftKings is pulling back as well, down 4%, which we called out yesterday. I didn't re-enter this position, but the closer it gets to 54, 55, the more and more I'm considering re-entry, because if you guys didn't know, I was in DraftKings for about 2 months. Bought it, all the way from 55 down to the 40s. I believe 45 is the last time I bought. So I built a nice position, and then I sold it after their earnings report, or right before. Actually, no, it was right after their earnings report. I sold out, and at 55 that was roughly. And now we broke out completely up to 60. Now I'm looking for that re-entry. So if we do get down, like I said, to 54, 53, I'm going to be looking to add. I'm going to be looking to add back into it. So I like DraftKings here. And the last stock for today is JP Morgan, ticker symbol JPM. And this one is looking to break out as well. I mean, we already are, actually. We're above the wedge here on the 4-hour, above the moving averages as well. We're seeing a golden cross, all that good stuff. Now I'm looking to see if JP Morgan could fill the gap up towards 167, which is the all-time high from about almost 3 months ago, from the beginning of June 2021. So that gives it about $6 per share upside from here, or about 3 to 4% when it comes down to percentage points. And that's kind of what I look at when it comes to trading, guys. I don't like to focus much on the dollar value, because everybody's trading with different account sizes, but I like looking more at the percentage value, right? Percent is what this game is about. It's not about, I made $1,000 today, I made 500 today. That doesn't mean anything. What means something to me is how much percent did you make today. For example, with me, the GameStop trade, I made 8% from 197 to 215. Do the math, it's 8%. So yeah, guys, that's pretty much it for today's video. We talked about Peloton, that is, Etsy, eBay, Zoom, AMC, DraftKings, and JP Morgan. And I ended up buying, one last thing to mention, I bought some Nordstrom today. Whether or not I'll regret that in a week, we'll see. But I bought a little teeny tiny position at about $28.90 today. I'm down a little bit, but it's a very tiny position. I have some wiggle room, meaning I might add some more because I didn't fill out the entire position yet. It's very small. So I'm looking at this more as a bounce back play. It's been trading in this downwards channel for months. I bought in on the lower end, the very low end of this channel. If we get a rebound to $30, $32, $33, guys, we're talking a 10-15% return. So that is what I'm looking at here in the short term for JWN. And if you guys stuck till the end, that is one of my picks that I'm actually buying actively. So consider yourselves blessed, even though it's not that serious. I mean, what am I saying? I'm acting like I'm Warren Buffett or something. But yeah, guys, hope you enjoyed the video. If you did, smash that like button, subscribe, drop me a comment, and check out my Patreon. If you guys want to support me a bit further, you get some free, it's not free. The M1 link and the Webull link, those are free, but the Patreon's not free, but you get all my buys, sells, call outs, morning update videos, more access to me throughout the day, all that good stuff. And if you sign up today for Patreon, you will be charged today and on the 1st of September. So I don't want to double charge you guys. So what I'll do for you, if you sign up today, just shoot me a DM. Very simple. Shoot me a DM on Patreon. I'll refund you your August payment so you don't have to pay that money when the month's ending in 3-4 days, if that makes any sense, because again, you'll be charged on the 1st of September. So if you join, DM me, I'll refund you. I appreciate you guys as always. Go down below again, get your $50 from M1 Finance, your 2 stocks from Webull. I appreciate you guys. I'll catch you all in the next video. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out.